Hello and good afternoon. Today we're going to look at the state of the rebound since the sell-off in early February. First, we'll look at Euro-US dollar on a weekly basis or the perspective over the next few quarters. The euro has been a proxy for strong reflation trades during 2017. And we can see that it has now reached the resistance of our corrective targets up around 125, and this is where it has basically stopped for now. Our risk index is in the middle of the range, but seems to be describing a small top here. So at the moment, we believe that we've probably finished the first leg up and that we could see some consolidation. That said, if you're a technical analyst, you probably think there's probably something still missing here, and that is possible, and we'll look at the daily chart. Now, the daily chart, you can see, is almost into overbought. It has a rounding top at the moment, and it is consolidating. Our impulsive targets up have been achieved, which means that the move may be exhausted. What we could see here is that we've started a consolidation in early February, and this consolidation for now doesn't seem to be quite over yet. We're still working our way through this area. Now, is it a distribution or is it just a consolidation? That remains to be seen over the next few months. But we believe that for now, there's little potential to the upside given our impulsive targets up. Now, looking at the hourly, we've had a nice rebound since early March and an oversold situation. And now we've rebounded into the resistance of our corrective targets up. They are around 124.40. We went probably marginally above them last week. And at the moment, this would be the barrier which euro-dollar needs to cross over to be able to accelerate up again. Now, our view is that the risk index is starting to roll over and could retest to the downside. And so as long as we don't make it clearly above this line 124.40, we are probably in a resumed downtrend situation, which we believe could probably last into early April. Now, looking at the summary, we look at the weekly long-term chart, which is against resistance of the upper end of our corrective targets. The daily seems quite exhausted, having reached its impulsive targets up, and the hourly, after a bounce, seems to be consolidating. It would really need to make it above 124.40 to reaccelerate up again, which for now, it doesn't seem to be doing. Now, we've looked at assets which were quite correlated to the euro over the last year, and one which we like is Brent, for example, which has been moving up and which is also on a long-term basis hitting again the upper resistance of our corrective targets. Now, if we look at the daily, the move was also quite exhausted to the upside, and it's now consolidating. It was quite overbought too, and we believe this consolidation is probably not over and could possibly see another leg down over the next few weeks. Now, the hourly situation is very similar to what we had on the euro. We've had a bounce. It is below our corrective targets at the moment and would really need to make it above them to reaccelerate. But at the moment, it gradually seems to be rolling over, which could justify a new move down into possibly early April and the lower $60 a barrel. Now, we also turn to the stock market and we look at the S&P 500. And the S&P 500 on a long-term weekly chart is quite exaggerated. It's in the overbought zone. Our targets have been reached. Now, it's not a bear trend yet, so you could still see a continuation trade over the next couple of quarters. But we believe the risk-reward here is getting quite stretched. Now, looking at the daily, a similar situation. We've had an overbought situation here in January. Our impulsive targets have been achieved, and we are almost in overbought again. And we believe that this could probably fuel a new correction down, also, again, probably towards early April. Now, over the short term, we're still moving up in the rebound. We don't think it's quite finished yet, so we'll probably have a target date here towards the 15th or the middle of this month for the end of this rebound. There's still some potential up, possibly to almost to previous highs or maybe even slightly above them, but also here at some point will become quite overbought. And given the overbought and exaggerated state of the daily and the weekly, we could very well see a new leg down, and again possibly towards early, perhaps mid-April. Now we look at the yen. The yen is a more difficult one. It's hard to understand which one is the most flight to safety, the dollar and the yen. They take turns at being the one over the last few months. But what we could say is that at the moment, on the weekly update, there's still quite a lot of risk to the downside on dollar yen. That said, our risk index is quite low. So although we believe these targets may materialize over the next year or so, we may see a transitory uptrend in the middle, possibly from the second to third quarter. Now on the daily, we seem quite oversold here on our envelopes where they're touching each other and on our risk index. The targets would justify one last sell-off into the 104, 101 range. But in general, it seems like dollar yen is getting quite oversold. And however, here on the hourly, it does seem to have resynced with risk assets. So you could see it bouncing here, but slightly below its corrective targets up. So you might see it roll over again over the next few weeks. So I think dollar yen and well, the dollar versus the yen is quite neutral as both take turns into a flight to safety mode. What seems more clear is looking at euro yen. And euro yen is basically still quite positive over the long-term view on the weekly graph, with quite some aggressive targets, which we will try to confirm over the next few months. But at the moment, it is correcting down, and this correction down, although it probably doesn't have much more to go, is probably not quite over yet. And it could move down to the 129 level and possibly into end of March, early April. And also here you can see the bounce over the short term on the hourly, which is below our corrective targets and which will probably be rolling over and extend this downtrend possibly over the next few weeks. So it's not a big crash we are waiting towards the end of Q1, but we would expect that over the next week or so, the rebound dies out a bit, and we could see a counter trend develop probably towards early, perhaps mid-April. And wishing you a very good week of trading. Thank you very much.